Have you ever felt overwhelmed by the hundreds of indicators on TradingView, not knowing which ones actually work and which are just noise? After testing more than 50 of them, I've found a combination of two underrated indicators that, when used together, can give you a powerful trading edge. In today's tutorial, I'm going to walk you step by step, from setting up these indicators on your chart to customizing the right settings to applying them in real trading scenarios. By the end of this video, you'll not only understand how they work, but also how to execute high-probability trades with clear entry and exit rules. So let's get started.
Step 1. Setting up the chart and first indicator. First, open up TradingView and pull up a chart. You can use any market you like for this: crypto, forex, stocks, or indices. For the example here, I'll use Bitcoin on the 15-minute time frame since it gives a good balance between action and clarity, but feel free to choose whatever fits your style. The first tool we're adding is the trend filter indicator. This will be our main reference for direction. Here's how to do it. Click on Indicators at the top of the screen. In the search box, type Trend Filter and select it when it shows up. Once it's on your chart, open up the settings so we can make a couple quick adjustments. Inside the settings, go to the Input tab and change the length from 20 to 25. This makes the filter a little smoother and less noisy. Then head to the Style tab. Clean things up by hiding any visuals you don't really need. The goal is to keep your chart clear, not cluttered. Hit OK to save and apply the changes. Now the trend filter line should be visible. It flips between green and red depending on market direction. This is what we'll use as our guide. Green line with price above it means buy bias only. Red line with price below it means sell bias only. That's it. Think of this line as your compass. You never trade against it. It's not about predicting the future. It's about keeping yourself aligned with the bigger push in the market.
Step 2. Adding the confirmation indicator. To make our entries stronger and more reliable, we're going to add a second indicator for confirmation: K's Convergence Divergence. This will help filter out weaker setups and give us that extra layer of confidence before jumping in. Here's how to set it up. Just like before, click on Indicators at the top. Search for K's Convergence Divergence and add it to your chart. Once it's there, open up the settings so we can tweak a couple of values. Inside the Input tab, adjust the following. Change sweep start length from 25 to 30. Change sweep end length from 35 to 38. Everything else can stay as the default. Click OK to lock in those settings. Now you should see two things appear: a background cloud that shifts color, convergence, divergence lines moving with the market. Here's how we read it. When both the background cloud and the line are green, we're only looking for buys. When both turn red, we're only looking for sells. Think of this indicator as our momentum check. The trend filter gave us the directional bias, but momentum is what tells us if that direction actually has strength behind it.
Step 3. Trading rules. Now that we've got both indicators working together, it's time to spell out the trading rules so there's no guesswork. The goal here is to keep things simple, mechanical, and easy to follow. Let's start with the buy setup. Trend filter must be green and price needs to be trading above the filter line. This confirms we're only focused on buying in an uptrend. K's Convergence Divergence, the background cloud and the line must also be green. This is our momentum confirmation, showing the trend has strength. Entry. Place a buy order only when both indicators align. Don't rush in early. Wait for the conditions to fully line up. Stop loss? Set just below the most recent swing low, or use the dotted support line if it's clearer on your chart. This gives your trade room to breathe without exposing you to unnecessary risk. Take profit? Aim for a 1 to 1.5 risk-to-reward ratio. That means for every $1 you risk, you're targeting $1.50 in potential reward. It keeps your trades balanced and makes sure one good winner can cover a couple of small losses. The logic here is straightforward. the trend filter keeps us on the right side of the market, while K's convergence divergence keeps us from entering when momentum is weak. By combining the two, we avoid chasing moves that are already fading and instead focus on setups where both direction and strength are in our favor.
Sell setup. Now let's flip the rules for selling. Everything works the same way, just in the opposite direction. Trend filter must be red, with price trading below the filter line. This confirms we're only interested in selling when the overall bias is down. KS convergence divergence. The background cloud and the line must also be red. That's our signal that momentum is in sync with the downward move. Entry. Only place a sell order when both conditions line up. If one indicator says sell, but the other doesn't agree, you simply stay out, no exceptions. Stop loss. Set just above the most recent swing high, or above the dotted resistance line if that's visible. This protects your position without cutting it off too soon. Take profit. Same as the buy setup. Stick with a 1 to 1.5 risk-to-reward ratio. For every $1 risked, the target is $1.50 in potential reward. This consistency is what helps the strategy perform over time. By following this structure, we keep things disciplined and avoid chasing random red or green signals that pop up on the chart. Instead, we're only trading when direction plus momentum plus risk management all line up. That's the edge here, waiting for quality trades instead of forcing every move.
Step 5. Why this works. The reason this system works is because it combines two things that most traders struggle to balance: trend direction and momentum confirmation. On their own, each one is helpful, but together they filter out a huge amount of noise. A lot of traders lose because they either fight the trend, trying to call tops and bottoms, or they jump into trades without waiting for confirmation. That usually leads to getting whipsawed out or chasing weak moves. By requiring both the trend filter and K's convergence divergence to align, we cut down on those mistakes. We're only taking trades that are supported by both the bigger market direction and the actual strength behind the move. This makes the approach simple and repeatable. It doesn't matter if you're trading crypto, forex, stocks, or indices. The logic stays the same.
So, to recap, add the trend filter to identify the trend. Add K's convergence divergence to confirm momentum. Enter only when both indicators align. Use a stop loss and target 1 to 1.5 risk to reward ratio. Stay disciplined and practice before going live. If you found this tutorial helpful, make sure to give it a thumbs up, share it with your fellow traders, and subscribe for more trading strategies. Trade safe, follow the trend, and I'll see you in the next tutorial. Happy trading!